Hey guys, this is Stetson with Socially Stetson, and today I am here with my friends. I'm going to let them introduce themselves to you after we give a shout out to our sponsor, Mixed Dirty Sodas. Cheers, guys.
Cheers.
I'll let y'all tell who you are, where you work, and what drink you're drinking on today.
I guess I'll go ahead and start. My name is Justin Boston. Thanks for having me again, Stetson. This is great. I am the managing partner and broker in charge at Horizon Realty Carolinas, and I am the team leader at Sunset Properties Group.
Nice. And what are you drinking? What's your drink?
Honestly, I forget. I need help. What is it called again? The Autumn Fizz. It's great, honestly. So thank you for hooking me up with an Autumn Fizz.
Love it.
Yes.
That's way fancier than what I went with.
Yeah.
What'd you go with, Mike?
I'm literally drinking nothing, just like water pretty much. I'm boring. So, I'm being healthy. I'm the sugar-free guy. I can't help it. But my name is Mike Hemphill. I'm with Barrett Financial Group, a loan originator for the second or maybe the largest broker shop in the country now. So that's where I'm from.
Love it.
Yeah.
Well, thank y'all for being live and in person today with AI coming around here. I think it's really good for people to know that there are real people telling real stories with real advice. And that is one of the reasons I wanted to have you out in the studio today. So, Justin, my first question is for you.
Okay.
Lots of home buyers moving to Charlotte,
Mhm.
lots of home buyers in general right now looking. What do you predict going into 2026? And Mike, feel free to piggyback off his answer.
It's definitely a hot topic question right now, for sure. I think the biggest thing that we're going to see is a continual stagnation of the market until we see better rates. There's a lot of home buyers that would like to be in the market that just either priced out or can't afford to get into the market. And you also have current homeowners that really just don't want to get rid of their current rate. They may want to upsize, they may want to downsize. There may be some type of real reason for them to move, but they're not going to as long as the rates are where they are. And I think that there's a lot of pent up buyer demand. And I think the biggest thing that we could see happen is if the rates do get better, we're going to see a lot of home buyers enter the market, and we may even see pricing just continue to increase. It's kind of a surprising thing, but I was going through some data recently here, and a lot of the general conception right now is pricing is falling, and they actually increased this year. So when you're looking at the market and trying to time things, what I always tell my clients and what we always do at our company is say, look, don't try to time the market. Do what makes sense for you when it makes sense, because you're going to be 30 to 60 days behind. The data is always 30 days at least old. So when you're trying to time what's going to get me the best deal, you probably already missed your window. So just focus on what makes sense for you and your family.
Yeah. Mike, what would you have to say? Because there are a lot that you could touch on for that.
Yeah, no, and that's a great example. So as far as rates, I would love to be able to come out and say, hey, this year they're going to be 4%. Do I think it's realistic? No. I think from my side of it, which would be, obviously dropping would be great, but just to have just any consistency, I think would help people. Over the last couple of years, it's really been a roller coaster ride where you have people that, they start shopping, they get pre-approved, maybe rates are 6%, and then 3 months later they're 7.25%. So I think that's made it very hard for people to kind of plan or feel confident that they can kind of go at this with the right mindset where, people start to get discouraged, with the prices, still going up on homes. Obviously they've settled a little bit, but they're still moving up, which is, the goal in real estate. But I think if we can get into, the low sixes, high fives, I think it opens up a huge window for people where, there are different government loan types, which are typically going to be, half to a full percent lower, depending on credit scores. I think if we're even in the mid upper fives, it at least gives people a striking distance to buy a rate down where maybe you are almost in the fours without, going crazy. So I think just consistency, and if we could just kind of stay, into the high fives, low sixes, I think it'll help free up some of that. It's just, the up and down, I think, has been a huge issue for people.
All right. I want you to explain this to me like you would to a second grader. How would you say what you just said to a second grader? There's so many people out there, guilty, that a lot of what you just said over our head.
Okay. So I think I guess the biggest part when you are planning, especially if you're a first time home buyer or you just haven't bought in a long time, everyone comes in and they're like, what can I get pre-approved for? And I don't look at business that way because I don't think it's the right way to set yourself up for success. My first question, or one of my first questions, is always, where is your comfort zone? and let's set the target there. Obviously maybe that's above where you can be approved for. Maybe, you have way more room past that. But I think understanding like where you want to be, we kind of can back into things and really simplify it. Kind of knowing that, down payment wise, if you put $10,000 more or less down, like that's going to change your payment, $60 a month. Or interest rates, like just kind of knowing where it moves. We can kind of set a goal, where we have a window and just really simplify it where you're not being like, hey, I need to run this on every single thing. And just kind of knowing like red flags, like, hey, I just moved into a city limit. My property taxes just doubled. That's gonna be a big problem for your payment if you're trying to stay close. So I think just like simplifying, just know kind of what you want your payment zone to be, and then really just kind of put a small range and make it. So I don't know. Was that
Yeah.
simple enough?
That was great.
Okay.
No, that was great. I say that too, just for social media standpoint. People always say like you have to take out some of the industry jargon and language because
Yes.
the average person wants to understand, and they really do want to know this information
Mhm.
truly. So we have to get that message out there.
I mean, most home buyers that are at least first time home buyers are coming from a rental situation. The easiest thing to tell them is what's your current rental amount monthly and how comfortable are you around that number? Do you want to see that number a little higher? Are you okay with going a little higher? Or do you want to go a little lower depending on what you might get in return?
Yeah.
I mean, that's the easiest way for a first time home buyer to look at it, especially, because they may not know what all costs may be associated. I think that's what catches a lot of people out is the maintenance costs and the things once they do purchase a house.
Right. And Mike, with that too, like what are some creative things that you're doing right now for home buyers and people, or do you have any recent stories?
So, oddly enough, a lot of the creative loans have been more investment driven, which is kind of, I guess, a little slightly different topic than we're kind of focused on. There's been a lot of people that want to get into investing, they're self-employed or
I
this
think
and
that's
that.
great because that it is true. There are lots of investors right now, especially around this area.
It's growing a ton and just in the market in general. So, non-QM loans, which are your your standard mortgages, not conventional FHA, VA, but it's, going to be specialty loans. That could be a bank statement loan or a DSCR loan, which is really popular for people wanting to buy rental properties because you don't have to show any income. It's pretty much, do you have a down payment? Do you have a credit score? Does it appraise? And is it going to cash flow? And so that, I think that market's up to like 10 to 15% of all loans are now like a non-QM style loan. So, I've had a handful of people that have been self-employed that we have gone that direction. Or, it's funny, like I have a guy the other day that wanted to do a refinance. He bought when the rates were super high, credit was shaky, and it was one of these specialty bank statement loans, and the rate was like 9 something percent. We just shifted. We were going to go like a conventional loan again, which you qualify based on tax returns. We switched to a bank statement loan. It gave him like an extra $100,000 a month in income.
Wow.
So like you you can just open up like a lot of self-employed people. I think they get themselves because obviously you're playing the tax game,
Right.
and then they're kind of like, oh, I can't do this but there's programs that really open up that path a lot to let you go after some things, and that can be on a primary, it could be an investment, either one.
Good to know.
Yeah.
I like this question. Justin, okay, I love Charlotte.
Mhm.
I grew up coming here and I've seen neighborhoods change like crazy. Is there a neighborhood right now that people are sleeping on?
So this is a question that I know you had in our notes, right? And I
Yeah.
actually did poll my team. I
Okay,
have
love
multiple
this.
answers. So without giving away too many neighborhoods here, this is something that we asked our team. And
I
this
love
was like a
this.
hot topic that I asked. We had a lot of texts going back and forth. So right now there's a lot of neighborhoods with developers that are starting to enter into the market. So you're seeing a lot of teardowns, a lot of like reconstructions. So, I mean, for example, like Sherwood Forest is one, Oakhurst, Stonehaven, Windsor Park, Sheffield Park. These are all seeing some change. And yeah, there's a lot of different stuff going on in Charlotte with builders. They're coming in and buying up in these communities. One of our agents right now is under contract on a house, and there's some new construction around him. He's going to tear the house down and build a brand new home. So
Nice.
there's a lot of that going on. It's been going on for years, but it's definitely transient right now and surrounding uptown Charlotte. So you're going to see a lot of subdivisions change a lot.
I was
over the
about to
next 10
say, I
years.
see a lot of the teardowns and rebuilds. Do you
Mhm.
see any neighborhoods? I know this wasn't in the notes, but do you see any neighborhoods that are restoring these homes? Like I see a lot of just teardowns, rebuilds.
Yeah. I mean, you do see a lot of that. I mean, Around Lake Norman, you're seeing it a little bit more. I mean, there's some historic areas like
Mhm.
downtown Davidson. There's a
Oh,
lot of
yeah.
historic homes
I
there
love
that
Davidson.
are getting a lot of uplifts and facelifts. But as far as the exterior goes, they look exactly the same. So it just depends. I think there, areas that have historical value, you're seeing a lot of that, stay. But I think overall, it's definitely very neighborhood specific.
Yeah.
Hmm.
Love it. Mike, what about you? Any neighborhoods that you see?
I don't know, I was hoping he was going to give me a great answer so I could just go buy a place in there and sit on it for a while, maybe put some investment packages together.
Yeah.
That's what we
Very
need.
good.
Hmm.
I watch too much around where I live, and I just keep seeing houses come up and nobody do any renovations. I'm like, can you guys please update them so I can?
Yeah. And that's a good
Love it.
segue, actually. And I know this is something that I would like to talk about, but, a lot of homeowners, and this is something that we're dealing a lot with in 2025. And I hope that in 2026, it'll improve a bit. But a lot of these homeowners that we're having, pre listing consultations with and just general back and forth with pre listing, um, we're having hard conversations around getting their houses ready to sell,
Mm.
and getting it to the point where we feel like it's ready for showings. And for a long time, really the past 5 years, we haven't had to get listings ready to market with staging and getting the housing repainted, exterior, all full facelift potentially in some houses, but getting a seller to understand that, when you're comparing yourself to either new construction or other listings that are sitting on the market, it really becomes how does my listing stand out for this price point? And what can I do to stand above the rest? And we're seeing buyers really get selective on what that looks like. And I think that if I were to give just the general industry any advice or any seller any advice, it'd be spend this time to get your house ready to list. It may take longer than you think,
Hmm.
and really be proactive because buyers are looking for that and they're very picky right now.
As they should be. I think
Hmm.
they can be. And I think that's a really, really good point because from a social media standpoint, too, we're seeing a lot of listings that are showing
Yeah.
AI potential.
Hmm.
Here's what you could do with this house. And like for buyers who are ready, they're like, no, just show me. I don't know what y'all feel about AI in the houses, but
I feel like that all the time when I see people put like pool renderings. This is what your pool could look like. I'm like, well, it's not there though, so it doesn't. You know,
Yeah.
not so much for me. But no, I get that question a lot. People that are getting pre-approved, and then they're like, we have to sell a house first, and they're like, I don't know, we're not sure about the timing. And that's like the biggest advice I give them. I'm like, you need to listen to your agent and price it right. Like if you go over, I'm like,
Yeah.
you're killing your time.
Mhm.
Yeah. I know that's something we've talked about in the past, but I mean, really timing a listing with a purchase, it's getting harder. I mean, we've done it a lot at our company, but as far as like getting a seller and a buyer to come to terms and get a deal on the table and also get their purchase done, it's getting harder
Yeah.
because days on market's creeping up, and really getting a seller to understand like you got to underprice it to get it to move. And I think it's more advantageous to either sell it outright and not have to time it, or potentially have an alternative living situation short term to make sure you maximize your value, because you really kind of in a way right now are paying for the convenience of getting your house sold quickly by underpricing it. So if you can really be patient, you will see a good result.
Yeah.
And honestly, we're seeing a lot of listings coming off the market right now in December just because sellers are not in a position where they need to sell.
Mhm.
They're just going to relist it in the spring. They still have a good interest rate. They're not in distress. So that's where like you're seeing a lot of buyers say, well, the market's going to get really bad. I'm going to wait. And it's like, there's really not enough people in distress for us to see this market change significantly. But, sellers are just going to hold on to their properties.
Yeah. I think that's the importance too of working with experienced agents and broker, like because AI is going to be agreeable. And so, like saying things like that, talking about interest rates and
Hmm.
talking about when's the right time to sell, what to sell, when to buy,
Yeah.
AI is going to be agreeable. And for both of y'all to have such expertise around that
Yeah.
and not just be agreeable,
Well,
I
Yeah.
think it's great.
there's things that we can do from our side too to help people kind of in that transition. So I'll get a lot of people call and they'll be like, "Hey, we want to look at like a bridge loan, which you're taking equity from your house, you're putting it to buy a new one. You don't really have to account for the previous mortgage. You have 12 months to kind of unload it." I've not been a huge fan of them just because the costs associated with them up front, and just you do an interest only payment a lot of times, and there's some times it works, but like I've had a lot of people call and you can go look at a new house they want to buy. And if they have, this isn't going to be for everybody, but technically, if you have 5% down, if you can carry both debts, technically, like you can qualify. If you go under contract, you're going to have 30 to 45 days before you close, and you're going to go another, potentially 30, 40 some days before you have your first payment. And then when you do sell, if you want to put that equity towards the loan, we can do a recast and bring that back down to what your loan amount would have been if you sold first. So, and it's a way more cost effective way to do it. So we get a lot of people call about stuff like that, and I try to steer that direction if they don't want to have to like time it exactly.
Yeah.
So.
And I will say this. I know this is something I wanted to say about Mike, and this is an important thing for me to share with everyone is Mike isn't the only one that does this, but any good loan officer really will give you unbiased advice. And it may even
Yes.
be, hey, I'm not the best person for you. And I think that's important. And I think it's hard to find. A lot of loan
Mhm.
officers want to earn your business, and that's great. But like to have someone say, you know what, this is what you need to do. I think that's why I enjoy getting to work with Mike, is because I know he's at least giving someone his unfiltered opinion, and he really doesn't have that vested interest to where he's going to put himself in front of what a buyer's best interest is. So I really truly believe a good loan officer will do that. And I just wanted to say that about Mike specifically.
That.
Yeah. Agreed, Mike.
I
We
do
think you're
that. I
great.
do that. And I
Yeah.
just did it 2 weeks ago. I don't know how much details I can go into with stuff, but like I had a client the other day that was trying to buy. They're moving back to the beach, and they had a credit thing hit, and that took their mortgage insurance from like $300 to $800 a month. And I was like, all right. I'm like, so like we were looking at pre-approval, and I happened to be going through one of their accounts and saw they banked with a certain credit union that I knew they would need a couple of exceptions, but like my wife at the time had worked there. So I kind of knew some of their backsides of it. And I told them, I said, call that you can do this. They have no mortgage insurance. They have a great arm right now. And, it saved her like $1,000 a month. And I
Wow.
was like, listen, I would love to do your business, but you need to call them. And it did. I think they closed next week, so it's, like everyone wants to get the deals, but it's like, you
Right.
can't get everyone. And at the end of the day, it's what's best for the people buying the house, not for my wallet,
Yeah.
so.
And it always comes back. It always comes back to
Yeah.
us. But I
Yeah.
love that story. So if interest rates were to drop to 4% in the Charlotte market tomorrow, what would happen? And would that be good or bad? Who wants to take this one?
So I think in summary, it'd be bad, just because, like I said earlier, you have so many buyers that are just waiting. They're on the couch. They're waiting for this market to improve in their eyes. And if it improves overnight, you're going to see a flood of buyer interest, and you're going to see values go up even more than you thought they could right now. We're in a very stable market, and it will go from stable to seller's market overnight. And I think with the inventory creeping up, that will go back down pretty quickly, because affordability has been the issue more so than what the house is. And yeah, I think that it'd be a bad thing, because if anything, it needs to be in more of a staggered, tiered basis instead of an overnight thing. If it's
Yeah.
overnight,
Yeah.
it would be kind of like what we saw in 2020 and 2021, where people, it felt like overnight, realized they all wanted to buy at the same time. And yeah, there was a lot that we could talk about with that market, but yeah, I think we'd see a lot of the same.
Yeah, I don't think it would be great. Earlier, we were kind of talking about just consistency and like just like having a stable market. I think 4% would be phenomenal, like over a year and a half, maybe, or a year. Just I think if it could gradually go down, selfishly, the refinance market for myself would probably be fantastic.
Right.
But I think you would also see it crash a lot of companies too. Like, in 2020, 2021, when rates came down so low, you had mortgage. I mean, there were people that were going through some of the big banks that it would take them 5, 6 months to finish a refinance because they weren't set up to handle that kind of stuff. So I think on that side, it would be unpleasant loan processes. Some places would be able to handle it, some won't. But yeah, I think the housing values you would see kind of shoot up because the inventory is not quite where it needs to be. Where I think if we had more inventory and the rates kind of gradually, I think it'd be a good balance where, but yeah, tomorrow would be chaos.
It'd be
Yeah.
awful.
Yeah, I'd be like, oh, let's have an extra drink today and go.
Extra water.
Extra water. I mean, I might put a vodka together.
Do you
for
think
that
that
one.
could happen? Do you think it's going to happen?
No, maybe someday. I think you'd have to see
But
some
gradually.
pretty crazy things. I think unemployment would have to really climb. I think inflation would really
Yeah.
have to get under control. I mean, not that it's like wild,
It's like, so people want the lower mortgage rate, but they don't understand all the things that
right?
Yeah.
Well,
would
and
have
that's
to happen for that to happen.
Well, I mean, if you were to get a 4% overnight, you'd want to already own the house, because you'd be
Right.
refining it versus dealing with the masses. And I think that's
True.
the real answer is,
Yeah.
the only way to truly benefit from that would be to already own a house,
Yeah.
because otherwise you're going to be
And
dealing
you
with
think
the
that's why people
competition.
aren't listing right now too, even if they want to, because they're
I think
stuck in
there's
their
more people listing than you think. I
Okay.
think it's getting tricky with all the new construction.
Mhm.
A lot of stuff is competing against new construction, and
Yeah.
that's where the rate incentives, if we got into a higher 5, lower 6, even really mid 5s, like he's saying, Mike was saying, like you could do a rate buy down, you could do something with closing costs to get it to be a little bit closer to par with the new construction incentives, because a lot of the new construction companies are offering massive incentives to their
Right.
lending institutions, and they're doing what's in their best interest, but in a
Yeah.
way it's hurting the resale ability, because we're dealing with a different market essentially with the rates.
Yeah. New wrinkle in my brain. I haven't thought about it that way before.
Yeah.
Yeah. I did want to circle back to what you were saying about the people not understanding like what kind of comes into the interest rate game.
Yeah.
And it's been happening a lot this year, well, really the last couple of years, but we keep having these Fed cuts now. And you get a lot of clients to be like, oh, the Feds are gonna cut rates. I'm gonna wait. And outside of when it just happened this week, every time the Feds cut the rate, mortgage rates have gone up that day or over the next week or two, because it's already kind of priced in. And I think you saw the last 2 weeks where rates have been a little bit higher, and I think everyone was kind of pricing that they were going to go up, so it was kind of ahead. So this was like the first time you saw it drop a little bit, which was nice. But yeah, like to get these major pushes down in rates, I mean, like unemployment's going to have to start climbing pretty good, and I guess to get inflation under control. So that's why I said the gradual means things can kind of settle, like the economy can still be stable, but just to do that overnight, there'd be some crazy economic things going on for that to
Right.
happen.
And I know that just from like working with you guys, I would have known none of that before hearing some of these conversations. But
Yeah.
in the average human non-real estate worlds, that's all we hear all the time. So I'm just
Mhm.
waiting for the rates to go down.
Yep.
And now
Yeah.
I know I'm like, oh, no, we
Yeah.
want that.
I think in today's society too, everyone's so, ready to tie their next 3-5 year decision on a headline. And I think
Yeah.
that's really where we need to really educate and inform just the consumer. Is the headlines are going to change every day. But really what it comes down to is what makes sense for you financially.
Mhm.
Getting with a good loan officer is really helpful, just to get context on where you stand. That way you can make a good financial decision, because real estate over time does appreciate. And I think that even if you consider I'm buying at the top of the market or whatever your mind that may be, there's still a good chance that you're going to end up making a good improvement, because to rent, you're at 100% interest,
Right.
So like regardless of what the rates are, you really just need to make sure you look at what makes sense for you. Real quick,
No prep on that.
no prep. What got you into lending, and why do you enjoy lending?
So kids would be my, I guess, why, I guess about to have kids. I started as a real estate agent after a decade in the automotive industry, and I really liked your side of the business. But I also realized when I got out of the automotive side, I wanted some weekend life,
Hmm.
and then I went into another industry that also had no free time on the weekends. So I was like, I'm getting ready to have kids. I said I want to, kind of transition. So I like lending because one, I can do it from anywhere. Two, I mean, I like numbers and stuff, and it's been a good balance where I kind of have been on your side, and it makes it a lot easier to kind of give people, advice that, I just think point them in a great direction versus just saying stuff to say it. So that's how I ended up in lending. Some control over my day.
Mhm.
But then you guys just call me all the time, so then it's just like, do I really have any freedom?
You work on the weekends.
I'm like, wait,
anyway.
it's 10:30. Why is this guy calling me right now? Oh,
Yeah.
I need a pre-approval. Of course you do. So
We feel the same in social media, by the way.
I'm sure. I'm sure.
I thought I would never work weekends.
Oh, it happens. I think unless you're a salary employee somewhere, it's hard to get away from it.
All right, so I'm just going to ask a couple of quick questions that you probably get asked a lot.
Mhm.
So, what would you say to a buyer who says, "How do I avoid overpaying for a home?"
You work with a good agent and a good loan officer. But no, the real answer is it depends on what your definition of overpaying is,
That's good.
right? I mean, overpaying could be a $250,000 house that you're getting an offer in for $240,000 and you feel like you're overpaying. It's a perceived thing. And I think when you look at what a home offers you for the price, there's a lot of good deals out there right now. And I think there's a lot of incentives. Like when we were working in post-COVID market, we were kind of like please accept our offer. And whereas like now a good realtor can get you a really good deal. I mean, we had one recently where we had a property in Davidson where we got a really good offer accepted, got all their closing costs covered, and they had like over 5 figures in instant equity. Their appraisal came in above contract, and
Yep.
we negotiated a really strong deal for them and got them a good rate. And they felt really happy with where they landed because they really weren't only out of pocket their down payment, and they had a ton of funds to do improvements.
Yeah.
So to them,
That's
I mean,
great.
that was a great deal, right? But it's someone else that may be, oh, I paid too much for my rate. So it really factors into
Yeah.
like what's important. So
I think they just don't know until they have the conversations.
mhm.
That's true. That's true. Yeah. No, I think it's all for your side. I mean, when I talk to people, it's kind of data. Like if you guys are actually showing, it's all numbers that you can pull
Mhm.
and show and listing that. And that's why I like on the list when I hear people that are buying and they're talking about certain listings that the agent clearly just like threw any number out and they're like, this makes no, like there's not a single comp that goes with it. So it's always fun to see that. And
Yeah.
then, yeah, on my side, I mean, can you pay too much for a rate? Sure. There's certain places that there's wild markups. I like the business model I went with where, I keep low overhead. I run super lean because, I'm not greedy and I'd rather pass savings on to people. And as long as I have enough to support the family, I feel like almost every time I'm quoting a rate that I feel like, is someone going to beat me sometimes? Sure. But most of the time I feel pretty dang good about it. So
Yeah.
I think all that together really
Yeah.
just helps.
Okay, this is good right now because winter.
Mhm.
What are you saying, Justin, to people who are like, should I just wait and sell spring and summer?
I think the conventional wisdom right now that's definitely holding true. It would be, remiss if I didn't say I'm having those same conversations right now with my sellers. This year specifically, it definitely feels like a lot of people have taken a collective deep breath and said, we're waiting for 26. Whereas normally it feels like, we can really, still get a good buyer to look at this house and potentially still get a good deal. This year, to me, it feels like I would be waiting a little bit. Right now we're in December. I wouldn't be listing in December. I'd be looking at January, February to get ahead of the March, April, like push, because a lot of people are looking for March and April to get on the market, maybe potentially get ahead of that. But the conventional wisdom is to wait till spring. But I mean, in this area specifically, I mean, Uptown Charlotte, a lot of this surrounding area, it is a year-round market. You get a little bit more of that sleepy vibe up in the lake, but I definitely think that for the most part, if you have the choice to wait, I would probably wait a little bit, but for the most part, I'd go ahead and do it if it makes sense to put it out there.
Yeah, I like the January, February before the spring market
Mhm.
hits. I think that's really smart, actually.
We're good.
These are
Oh,
too
yeah.
boring for me. I'm going to ask. All right, how did you two meet? What was y'all's meet cute story?
Meet cute. We met at a breakfast spot. I think we got introduced through a mutual friend at first, and then it just kind of grew from there. He has a tie-in with some family. He actually, one of his closest friends actually was one of my past clients, so
Yep.
it kind of worked out where we had some mutual connections, and our relationship has grown ever since. And at this point, he's doing, for the most part, as many loans as I can get his way. I mean, we definitely have multiple lenders that we like to recommend, but like I said with Mike, at least I feel confident knowing he's giving them an unfiltered, unbiased opinion and letting them make their informed decision, just like I do. I talk more clients out of deals than into deals at this point, just because I really try to make sure that I'm not relisting their home in 6 to 12 months because it's hard to do that. And I want to avoid that as much as possible myself.
Yeah, it was good. It was a first watch. Is that where we met?
Yeah, first watch.
First
Yeah.
watch. So yeah, it was good. And I think it was kind of nice because I don't feel like either of us were trying to sell each other. It was kind of just like, do we vibe, or not? I rarely go into meet any person or agent with this like sales pitch. Like if I just feel like it's naturally going to happen, and then you eventually get a chance to do a deal together and you either do great or you don't. And it kind of goes from there. But no, we had a really good first get together and, similar vision of the future. So it worked out well. We kind of really care about taking care of people more than just saying we're the number one something.
Agreed. From working with both of you guys. Agreed.
Yeah.
All right, last question. What's on your Christmas wish list for 2025?
More pickleball paddles.
All right.
Good to know. Okay.
Just kidding. I have too
Allie,
many.
put that on the
I have too
list.
many as it is. No. I have played way too much pickleball, but it's something I enjoy coming from racing. So it's something I like to do in my free time for sure.
I'll be there December 18th.
Heck
Allie,
yeah.
get
Anything
get
apparel
your
related,
pickleball
you
shoes
know?
ready.
Yeah.
Yeah.
What about you, Mike?
I have no idea. You know,
More
my
go-karting
kids.
stuff?
Yeah, I gotta stop spending money on go-kart stuff. I don't know. I have no like. I want land. That's all I want. I, just want,
There you go.
I don't think anyone's gonna gift me any land though. So like, I just made my Christmas gift to myself maybe.
There you go.
Yeah. So no, I was just looking
Buy
for
dirt.
some country living maybe. Serious. I know. I come across
Merry
that way.
Christmas.
I do. I just want a country and some 4-wheelers and just chill. That's like the best gift I could get right now.
I like it.
Other than just my kids being happy. You know, that was probably the better answer.
Yeah.
There you go.
I want them to be happy too.
We'll put that one in.
in the country on their 4-wheelers. See?
There you go. I like it.
All right.
Well, cheers, guys. Thank you for
Yeah.
coming today.
Thanks for having
Thanks for
us.
Mix.
Happy holidays.
See y'all next time.
Yeah.
All right.
Thanks.
Thank you.